Ladies and gentlemen, another beautiful day holding SoFi stock, now actually closing the day at $16.12, which was above our previous 52-week high. We actually hit a point of $16.16 today, which is our new 52-week high. It's actually over our 1,000 day. Instead of 52-week high, we're actually looking at like 150-week high plus. But that being said, we actually got a research report from Jefferies that put a $19 price target on SoFi as the base case for their model. Now, I want to go through that model because I think that it's extremely bearish, and it actually proves out to be why SoFi should probably be at a much higher price than what even they are putting it at. So, first off, let's just take a quick glance at what this report actually says. Okay. First off, they say, hey, SoFi, we believe, has a flywheel effect. Galileo is signing on new deep partnerships with neobanks and challenger banks, and that the bank charter provides them with a lot of extra liquidity for them to go out and sign more loans. Awesome. Okay. They then write three separate reports. One, the base case for SoFi at $19 a share, up 21% from the time of recording this of November 21st, or sorry, November 25th. And they say flywheel effect generating top line growth, modest margin expansion, and lower customer acquisition costs. They have a bank charter that benefits meaningfully, that is affecting margins through lower cost of funding. They'll have strong financial services and Galileo growth contributing to meaningful top line results, which is revenue side. Okay. And SoFi maintains GAAP profitability, assuming a 34.5 times 2026 expected earnings per share. They see a $19 price target. On the upside, here in the center, what we see is higher cross buying of larger loan products in SoFi's app, driving stronger top line and margin growth. So not only are they seeing financial services and Galileo, but also lending is popping off. Okay. Galileo sees significant growth given strong overall neobank growth and contributes more meaningfully to top line SoFi growth, and large rebound in full year 2024 student loan originations following end of student loan moratorium, assuming a 40 times 2026 expected earnings per share, which would put them at $22 a share. Now, their downside is significantly far off all their other scenarios here. And they said, red tape associated with increased regulation with bank charter prohibiting SoFi from, being able to launch products more quickly. SoFi's all-in-one product proves to be a jack of all trades and yet master of none. So they're actually going to get beat out by the likes of, let's say, a Robinhood, for example, that might be a little bit more focused on a very specific product. Galileo loses market share to competitors with better tech stacks, affecting SoFi's top line, and delayed profitability into 2024 and beyond. Price target of $10, 18 times 2025 expected earnings per share. Now, I wish they'd actually put an expectation of multiple for 2026, but that's fine, right? The reason why I say 2026 is because that's the guidance that SoFi has given. We know that there's a range that they expect for earnings per share for 2026. We don't actually know what they're expecting for 2025 just yet. There are some assumptions that it's in some part in the midpoint to get to 2026, but we don't exactly know. I added in because some people believe the best is coming for SoFi. If we expect an 80-cent EPS here, what SoFi might see at a 34.5 times 2026 expected earnings per share, we'll actually see $27.60. So that would actually be the base case if SoFi came out at 80 cents, assuming the same level of multiple that Jefferies has put on the stock. Okay. At their upside or their bull case, we're actually seeing a $32 price target if you're taking 40 times 2026 expected earnings per share. Okay. So that's just another way of looking at it if you're expecting 80 cents of earnings per share. Now, you're probably asking me, Tanner, well, what is Jefferies placing their EPS targets on SoFi for 2026? Well, I'll tell you, it's 55 cents, which is the absolute lowest case for SoFi in their range. Okay. And then looking at this was just another thing I wanted to include here. They're tracking monthly active users and app downloads. And in the app download section, SoFi is actually seeming quite strong for October at 25.8% growth year over year. Now, This is just the general parts of the report, but there was a massive amount of information that we saw from their financial review. Jefferies sees, I don't want to say a lot of growth, but they have some expectations for SoFi, and I want to show this off. So why don't we go ahead and look at this? First off, what I'm tracking here is all of the financials. So they don't talk about member growth or product growth or anything along those lines, really. All they talk about in here is the financials, which we got a pretty good stream. And I broke it down into a couple things. One, in this dark blue, you can see SoFi's real statistics that they've posted on a quarter over quarter basis. Then I have SoFi's Q4 2024 guidance that they've posted of the midpoint of their guidance. And then right here, I have Jefferies Q4 2024 expectations. So one, you can already see that their total net revenue is 635 million. SoFi's is 677 million. And yet this is actually their midpoint of their guidance. SoFi has never not beaten this number. They've always beaten to the upside. Actually, they do it based on adjusted net revenue, which you can see here, 672 million. Where Jefferies is actually saying it'll be 630 million. They are $40 million off of their top line growth, for which SoFi has never, ever missed this number since they've been a public company. So Jefferies is saying, hey, they're going to do something. Although we have the most bullish price target for SoFi, they are going to massively miss this quarter on not only revenue, but also on EBITDA and net income. They're going to miss on all three. That's their expectations for a $19 base case on SoFi. Okay, adjusted EBITDA of $164 million is the midpoint of what SoFi is expecting. They always beat the top end, but yet somehow they're seeing 142 million and only 35 million in net income. What we're expecting, sorry, not even what we're expecting. What SoFi is expecting on the midpoint is 38.8. It'll probably come somewhere around 50 plus if you were to just get my regular range on this in the early parts of this quarter so far. SoFi does not give guidance on all of these extra statistics, but I did want to show you them from Jeffrey's point because, they do see stock-based compensation coming down, depreciation and amortization, they just sort of keep flat all the way through 2026. And they also have some expectations for the different expenses, which we can go through as they sort of show SoFi from an annualized basis going forward. So this is Q4, which you can already see how off it is from the full year. Now, I did this again, and I wrote this out for SoFi, which this is what they're expecting based on these numbers, how much the full year of 2024 is going to come out to. And then I also put it in just to take a look at what Jefferies expects for 2025 and 2026. Take a look at this. 2024 net revenue for SoFi from their midpoint of their guidance, so we don't get to see Q4 yet because it's not public. They're looking at $2.6 billion of net revenue. Actually, let's adjust it for their servicing rights. So $2.54 billion. Jefferies is expecting that this is going to grow year over year by 11% next year to 2.8 billion. And then year over year after that, they expect it to grow from 30% for some reason, as if 2025 is not looking to be a bullish year or something along these lines. Same thing for adjusted EBITDA. They expect just a marginal increase year over year, 31%. And then 2026, they expect an 85% growth rate. It's kind of crazy. And what I'm actually seeing here, I'll tell you guys what my expectations are. But before I do that and tell you my reasoning here, you'll also see it happens on the total net interest income and non-interest income. You could see that SoFi is actually seeing non-interest income as a percentage of their total revenue, or how much of it could potentially be fee-based, is 32%. The higher this number is, the definite larger multiple that you can give on SoFi. So this went from 32%, which is actually lower than our recent quarter, to 36%, still around the same part as what we got last quarter. So they're expecting no growth, more fee-based revenue into 2025, but yet they also don't talk about any lending growth either. And then in 2026, they expect that fee-based revenue is going to explode all the way up to the majority of their revenue to 58%. Here's my conspiracy. I think that the Jefferies analysts here had no idea what they're expecting for SoFi going forward. What they did want to do is include SoFi's 2026 EPS as being part of their thing because they did not want to bet against Anthony Noto. So they actually put earnings per share as 55 cents. Okay. 55 cents just so you're in Anthony Noto's range. And then everything before that, they just simply could not really see the growth there. So they have a 12% margin here. This somehow gets jacked up to 20%. You see, essentially 9% growth rate on revenue. This somehow gets jacked up to 30 plus percent. Fee-based revenue skyrockets in 2026, as if there's not already massive bull cases in 2025. Okay. I'll just show you guys here. This is their non-interest expenses too. They expect massive benefits all throughout all of their expenses, just miraculously in 2026, as if these benefits are not going to be recognized in 2025. So in my opinion, they are not that bullish on SoFi. Jefferies believes that SoFi's Q4 is going to be massive, massive misses. 2025 is going to be nothing but extreme letdown. If SoFi actually comes in an 11% growth rate in 2025, I promise you guys I'll sell every share. Like barring that what we know in the macro stays consistent. Okay. So this could massively change, but knowing what we know, a 7-year positive macro environment, lending platform just booming right now, Galileo going to see massive client selling and financial services continuing to boom, I expect that probably what their 2026 expectations are of 30% growths will probably be closer to what we actually see in 2025. And then hopefully by 2026, we can continue that trend, or maybe even just slightly lowering in terms of their growth rates, just because of some law of large numbers. So let's just put this into context. This is how the most bullish analyst on Wall Street is seeing SoFi right now. $19 price targets, potentially can get up to 22, but their bear case is all the way down at 10. It's like they really want to write 10, but they don't actually want to have their price target too far off, because then that actually affects their rating. So they're going with the momentum of the pricing, and all of their financials do not align with it at all. 55 cents, I feel like, is just, some sort of cheap right, so then they can get into Anthony Noto's good graces. And like their expectations for Q4 are just massive misses across the board. They think it's going to be a triple miss, like massive misses. It's something that SoFi has never done in the history of being a company. They've not only exceeded their middle point of their guidance, but they've always exceeded their top point of their guidance. It's always been triple beats. So what is to say that that is not going to be the case going forward, excluding some sort of crazy macro environment, which is not what we're seeing at all. We're actually just seeing only bullish revisions to their to the macro. And so they should actually see not only good Galileo growth, not only good financial services growth, but most importantly, good lending growth. In my eyes, this is how retail is going to build positions that have great alpha, where Wall Street is just simply missing the mark here. SoFi is being rewarded with it in the market, so it really doesn't matter. Thankfully, we passed $16 a share today, and we can celebrate another big win in the books for SoFi. If you guys are still holding, let me know in the comments down below. And what are your expectations for SoFi's price targets by end of year? Thank you all so much for watching. Really do appreciate your time, but bye for now.